Good morning, everyone. My name is Krunal Thakur, and today we are going to discuss one of the very important topic of economics, which is money, the concept of money. Here we will see some of the dimension of money in this video. Let's start our video. The first concept, the first dimension is barter system. What is barter system? Barter system is the oldest form of exchange where goods and services are directly exchanged for other goods and services. So here things are exchanged for the things. Here no money is involved. So in barter system, no money is involved. For example, if a farmer want pot and potter want wheat, then what happen? They are exchanging among themselves. A farmer give 10 kg of wheat to a potter in exchange for one clay pot. That is barter system. What are the characteristics or feature of barter system? So in barter system, when things are exchanged for the things, here direct exchange is there. It includes direct exchange. It means goods exchange without any medium. Next feature is it is based on local system. It work mainly in small villages and tribes. The third feature is mutual based. It is mutual need based. Exchange only when both party needed each other goods, like double coincidence of one should be there. If double coincidence of one's now not there, then barter system is not possible. The fourth feature is no standard value. Value was decided by bargaining, by consultation, by dialogue between the party. So by bargaining, the value are decided. It means there is no standard value. These are the feature of barter system. Now, there were some problem with barter system. Definitely, why it failed or why it was not successful today, it is because of the problem. So in barter system there are some problems like first problem, double coincidence of wants. Number two, lack of common measure of value. Number three, difficulty in storing wealth. Four, indivisibility of goods and difficulty in deferred payments. These are some of the problem associated with the barter system, and because of that it failed. Let's discuss this problem one by one. The first problem is double coincidence of wants. What is double coincidence? Like both the party, mutual need of the party, like owner of X want Y and owner of Y want X. Like both need the things of each other, then it is called as double coincidence of one. If double coincidence of wants are there, then only barter system is possible. Otherwise, it is very difficult. So it is based on double coincidence of wants, but always it is not possible to have this phenomena, and that is why it is difficult to implement barter system. So exchange possible only when both party needed each other's goods. For example, if farmer want cloth but the weaver does not need wheat, then this exchange failed. The barter system failed here. The second problem is lack of common measure of value, like no fixed unit to measure value of goods, and that is why it is difficult to have barter system in this phenomena. For example, how many banana for one goat? Everyone argue differently. Some will say there are 12 banana for one goat, and some other will say there are 12 banana for two goat. So everyone argue differently, and that become a problem in barter system. So lack of common measure of value is one of the challenge in the barter system. The third problem is difficulty in storing wealth. Goods like wheat, fruits, cattle could not be stored for long. Some goods are perishable, so it does not work in a long time. So for example, wheat may rot, milk may spoil, cattle may die, and that is why it becomes difficult in barter system. The fourth problem is indivisibility of goods. Like some goods could not be divided without losing its value. For example, if farmer wanted a small item like salt, how could he divide his cow into parts? So that is not possible, or it is difficult. So indivisibility of goods is one of the problem in barter system. Next is difficulty in deferred payment. Like, if you take loan, if I borrow money, I promise that I will pay in the future with interest. But in barter system, it is difficult to implement this type of phenomena. So future payment, loan promises were not reliable. For example, if someone borrow 10 sacks of wheat, how would they repay after 1 year? Wheat may change in quality or value, and that is become difficult in barter system. Now, why barter failed? So because of this problem it failed. As society grew and trade expanded, surplus expanded, these problems made barter impracticable, impossible, difficult, and that is why barter system failed. This led to the invention of the concept of money as a common medium of exchange, and hence the concept of money came into being. Now let's look at money, the concept of money, meaning of money, what is money? Money is anything that is generally accepted as a medium of exchange. It replaced the old barter system where goods were directly exchanged. For example, rice for clothes and clothes for rice. That was the barter system. So money concept, the availability of money, the concept of money replaced the old barter system. What are the functions of money? So basically, there are four functions of money. The first function is essential function is medium of exchange. Number two, unit of count. Number three, store of value. And number four is standard of deferred payment. These are the essential functions of money. Now let's look at this function individually. So first function is medium of exchange. It means it facilitates buying and selling. It removes the problem of double coincidence of wants in the barter. So barter system have this problem, like they should have double coincidence of wants. This problem is removed by the concept of money phenomena. For example, you can pay rupees 50 for milk instead of finding a milkman who want your things, your old shoes or your commodity. So that is how it is working. So medium of exchange is first essential function of money. Next function is unit of account. Common, it is money is a common, money have common measure to value goods or services in terms of prices, like prices are quoted in rupees or dollar, etc. For example, one pen is equal to 20 rupees or one notebook is equal to 40 rupees. You can compare easily, and that is how money is very useful. That is the essential function of money. The next function of money is store of value. It helps save wealth for the future use. Unlike perishable goods like fruits, tomato, etc., money retain its values. For example, you save rupees 1000 today, you can spend it after 1 year. So that is also essential function of money. Next is standard of deferred payment, that is delay payment or postponed payment, that can be possible with the help of money. It is useful for loans, EMI or contracts. It ensures smooth credit system. For example, you borrow rupees 10,000 and agree to repay after 1 year with interest. That is possible with the help of money. So these are essential functions. Now, if you look at different dimension, you can say that there are other functions of money like primary functions, secondary functions, other functions. Primary functions are these, like medium of exchange, unit of value are the primary functions of money. Secondary functions of money are standard of deferred payments, store of value, transfer of value are the secondary functions of money. Other functions are distribution of national income, liquidity and uniformity of value. These are other functions of money. So, so money have its function, it is essential functions, and because of that it become popular. Now let's look at another dimension which is forms of money, means types of money. So there are different types of monies, many types of money. We will see some of the types like commodity money, fiat money, bank money, electronic money, and new age money, that is cryptocurrency. Let's look at these types one by one. The first type of money is commodity money. Some goods have very good intrinsic value that they act as a money like gold, silver, etc. So goods with intrinsic value used as money. These are the commodity money like gold, silver, salt, cow in ancient time. Next is fiat money. Like some currency are those currency or money that government guarantee as legal tender. They don't have intrinsic value, but because of the law, because of the legality, it is having some value. That is fiat money. Currency notes or coin issued by government are fiat money. They have no intrinsic value, but accepted by law. For example, rupees 100 note. They are just paper, but they are legally valid. They are fiat money. Next is bank money, like bank draft, bank check, demand deposit, check, drafts are bank money. For example, you pay via check of rupees 5,000. That is what is bank money. Next is electronic money, digital form of payment like credit card, debit cards, UPI, wallets are electronic money. For example, ATM, Google Pay, Phone Pay, these are electronic money. Now, new age money is cryptocurrency. It is virtual money using blockchain technology. This type of money is cryptocurrency, like Bitcoin, Ethereum are the example. It is not controlled by any government and legal status varies across different region. These are the cryptocurrency. Now let's look at the characteristics of good money. In order to be a good money, what are the characteristics needed? The first characteristic is acceptability. It must be trusted by all. Next character is durability. It should be long lasting, not like fruits which are perishable. It should be long lasting, sustainable. Next is divisibility. It can be broken into smaller units like rupees 100 can be divided into two parts, 50 rupees each. It should be divisible. It should be portability. It should have portability, like easy to carry coins and notes. We can carry notes, we can carry coins. It is having portability. Next is stability of value. It should not fluctuate too much. These are some of the characteristics of good money. So here we have seen some of the dimension of money. The remaining part we will see in the next video. Till then, thank you so much. Bye.